The argument rested on the assumption that Trump was telling us the truth in his campaign, that there would be 10% baseline on all countries and 60% on China. And taking that, we then looked at what percentage of exports actually go to America. And for many, many countries in Africa, it's 1 or 2% of their GDP is accounted for by exports to the States. And if that was hit by a 10% tariff, maybe we lose, in a worst case scenario, 5% of their exports to America, which is like 0.1% of GDP or 0.2. And for many African countries, the weather, how good the rains are, is far more important for GDP than 0.1 or 0.2%. So that was the premise of the argument.
Yvonne, I want to bring you in here. Do you agree with that argument? And based on the numbers that you've seen, what's your position on that?
So our view is that the fact that a lot of African countries are commodity exporters would provide them with exemptions, which would actually reduce the effective tariff rate. So if we look at the original tariffs that were imposed in African countries, particularly in those that run trade surpluses with the United States, Angola is probably the best example. The reciprocal tariff they got was 32%. But when you now account for the exemptions, and keep in mind energy, which is oil and gas, as well as critical minerals are exempt, the effective tariff actually dropped below 2%. So for that reason, we were less concerned about the impact for particularly the commodity exporters, including the countries like Democratic Republic of Congo that exports copper. We're more concerned for smaller countries like Lesotho, which, as you know, was slapped with a 50% tariff. Their exports to the US account for 10% of GDP. So in that particular case, that country wouldn't be able to escape that hit if those tariffs had remained.
So then now we are effectively at 10% baseline, at least for 90 days. What does that look like for some of these countries? Is there still a bit of concern that it could hit GDP if it does in fact hold? Yvonne?
So it significantly reduces the hit on GDP. As I mentioned, Lesotho by far was the one hardest hit. So yes, it is very good news that they have been reduced to the baseline level. For a country like South Africa, though, that has automotive, steel and aluminium, which have their own, which draw their own tariffs, that still is imposed, but significantly lower than the original effective tariff of 18%.
What could these countries then bring to the negotiating table, Charlie, if in fact the President of the United States does say he wants to keep a more mutually beneficial trade balance with these countries? What does a country like Egypt and Kenya and some of these others have to provide that won't completely dent their own GDP?
No, it's tough. I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China in 2023. It's something like $40 billion. And whatever the tariff rate ends up being on China, it's going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories. It might only take 3 months to move a textile factory. They're quite simple. Move them to places like Egypt, move them to places like Morocco, and create jobs and creates the beginnings of that industrialization we want to see in so many countries. There could be upside from all this tariff noise.
Yvonne, do you agree?
My challenge is that African countries have limited options in terms of what they can offer the United States. For instance, one of the arguments was that the trade surplus should be eliminated. In the case of Lesotho, it's too poor of an economy to spend the additional $200 million on American goods in order to eliminate that deficit. The other argument by the US is that countries should set up their factories in the United States to help create or return manufacturing jobs. The US, that's not going to come out of countries like Lesotho, Mauritius, and Madagascar, which have been particularly hit. So our view is that the countries that benefit in this environment, or at least are least affected, are those that have the critical minerals that the United States need, as well as the energy, which will help secure energy security for the United States.
How much of a concern? Charlie was talking about the knock-on effects potentially of the U.S. and China continuing to ratchet up their own trade tensions. What is the Bloomberg economics estimate for what that could do to the economies here?
It's a very good point you make. We are more concerned about the indirect impact of a trade embargo between the United States and China, because effectively that's what these tariffs of 100% between each country does. And what will result is a slowdown in both big economies, and that implies a decline in demand for our commodities. So we think the direct impact of the tariffs will be smaller than the indirect impact of a slowdown in global growth.
Charlie, is that where we're headed based on your own research and what you're seeing right now?
I concur with Yvonne that I've been more more concerned, but at least as concerned about the knock-on effect via China. The highest country in terms of exports to the US was Lesotho, but Congo had something like 73% of all their exports go to China. Sierra Leone, 60% go to China. Eritrea, 60%. I mean, these are countries far more dependent on what happens in China. So the question then is, how well can the Chinese navigate the tariff trade war with the States? Now, for them, America's 2% of GDP, of Chinese GDP is exports to America for China. So hopefully they can get through it, but it's just hard to know how it's all going to play out. So there's a sensitivity from the direct impact from the US totally, and there's also that sensitivity via China and potentially a global slowdown if the trade war heats up again in the third quarter.
So, Charlie, Yvonne was just mentioning some of the resource-rich countries on the continent that could potentially see some of the benefits of this continued escalation. What is your viewpoint? Is there any potential winners from your perspective?
There's at least two angles to this. And one is that if US rates come down, which Trump definitely wants to happen, that might help on the debt servicing side if there's a knock-on effect on the rest of the continent. But it's the oil story that I think could benefit a lot of countries. Countries in East Africa like Kenya, DRC, there's a whole host of countries across the continent that are going to see smaller oil bills, that are going to see lower inflation probably because of lower oil prices. And that gives their central banks room to cut rates a bit more. And that is helpful for their economies and helping their consumers weather some of this storm.